Welcome to BitBoy Crypto, home of the BitSquad, the largest and greatest crypto community in all the interwebs. My name is TJ, and I'll be your host for today's episode of Around the Blockchain. Man, that intro is really good. I saw we got some mixed reviews on that in the chat, but I think that thing's fire, so we're going to probably have to work a little bit of more DZ in there as we're going forward. So, as he said the other night, he's going to be doing some more hosting on the show, so you guys get used to it.
You're fired, TJ. You're fired.
Yeah, everybody saw in the chat yesterday. Everybody thought I was fired. No, I'm not fired. I'm still going to be around. You're still going to see me. I'm still going to host this show sometimes. I'll be on the panel sometimes as a guest, but I'll be around. As you guys know, I am the CEO of BitBoy Crypto here, and we've got a lot of projects in the works. You know, most of it you guys see, but we've got a lot of other stuff that you guys don't see. We got a new building. We got Hit Network, a media company that we're getting up to speed. So we're doing some charity work in Central America now, trying to get those projects off the ground. So we just have a lot of different irons in the fire, and having both of us tied to two different shows a day. As much as we love you guys, as much as we want to get as much content for you all the time, you know, we've got a lot of stuff to do. So DZ, we brought him in to do content. He's a really good content creator. He's been watching and involved with cryptocurrency for a really long time. He's a good trader, in this stuff all the time, sits in our office. So he's a really good guy. You guys are going to like him, and you're going to be seeing him a lot more doing all kinds of content with us here on BitBoy Crypto. So, but for today, you got me. I'll be back again on Friday, but then starting Monday, you're going to have a lot more DZ. So we got a really good show for you guys today. I think this one's going to be a lot of fun. It should be a really interesting discussion. We've got Gregory from Dapp University joining us here today, as well as Aaron from Altcoin Daily back again, and as well as one of the most prolific and earliest voices in Bitcoin, one of the biggest proponents of it, and then maybe later changed his tune a little bit, Richard Hart. We're going to be talking a little bit about his project today, Hex and Pulse, which he's the founder of. He's got great perspectives on Bitcoin. He's probably one of the most knowledgeable on a lot of different subjects when it comes to cryptocurrency, so it should be a really interesting discussion today, as well as fresh off the leg day, moving that 500 pounds, BitBoy Crypto, Ben Armstrong, top left corner. What's that? What's your sign say today?
I put a hex on you. That's
there
what
we
it
go.
says.
Nice. So before we get too much into Hex, we're going to be talking about Bitcoin. We know we've been trading in a really tight margin lately. Normally, we'll do a quick market watch. Bitcoin price has been trading mostly sideways. We've got KuCoin still pumping, Solana up a little bit, but for the most part, Bitcoin's been trading in a really tight range. And we've got these Bollinger Bands that have, when the volatility gets really, really low and the range tightens up on Bitcoin, we usually see two things. When it comes to a point, it's either going to break up or break down. So last time we saw in this range when we were at the 0.15, which is basically the divergence of the 20-day moving average. So the first time we were at this point was in December. We broke up from 20,000 and made a huge run up. Last time we were at that $60,000 price point, and we broke all the way down to 48. So it's clear we're coming to a point where we're going to see most likely a dramatic move for Bitcoin. The question is it going to be to the upside or the downside? So Richard, I know you've had a lot of experience with Bitcoin. You called the top with the Coinbase IPO. You've got a lot of experience watching the patterns and the movements of it. So in your experience, what are you expecting to see next from Bitcoin?
Well, unfortunately, everyone only likes bullish sentiment. They don't like the bear narrative. And every 3 or 4 years, crypto drops 85%. That's what it's always done. It's never not done that. And now we're due. So if you count how long we've been in the bull market, we've been in the bull market for a few years now. People just didn't recognize it. They just didn't realize it. And now it's time for everyone to pay for their sins. The richest guy in the world already bought. The big companies already bought. Government's already bought. The IPO already happened. Okay, so who's going to buy next? No one's going to buy next. It's going to go down to 10,000. It's my guess. That's an 85% drop from 65K, which is what we normally do. Now, once it does that drop, once people have the opportunity to buy the top and sell the bottom, great. We get to go make new all-time highs again. Let's go to 100K. Let's go do exciting things. But I think a lot of people have to lock their losses in and have the opportunity to sell the bottom. Guys like Michael Saylor. Michael Saylor, bought at 20K. Now it's at 30K. He worked really, really, really hard to get that 50% increase, which in crypto, you get the right coin, you make 50% a day. It's pretty funny how hard he worked for that 1.5x.
Yeah. No, that's a good point. And like you said, it does traditionally draw down in the past. I also forgot to mention, if you guys are new to the show, if you haven't watched this before, you'll see the score boxes in the bottom right-hand corner of each of the guest box. If you like what you're hearing from any of the guests, drop a +1 in the chat. I'll know to give them an extra point, and whoever has the most points at the end of the show will have 30 seconds to leave a parting message. And as always, the links are in the description below to all of these channels. So if you want to hear more from any of our guests, feel free to.
I should mention this to you. Bull traps are in the game. So back in 2017, when we couldn't hold 20K, we dropped 45%. We did bounce back up to 17,500, and a lot of people got long again at 17,500. So, I was hoping for that fractal to replay and for us to head up to about 55K again, dip, retest 50, dip, retest 40. And it's just been so weak that we haven't got that retest. Maybe now we could get up to 45 to try and get some people long again to kill them again.
So in your opinion,
pray for a bounce.
Yeah. So in your opinion, we're either going to break down or maybe see a slight bull trap.
Well, I think we're definitely going to do an 80% dump. I think it's going to go down to 10K, and we're just all hoping that we can get a nice bull trap with some nice strong movement like we're getting now. We didn't get it earlier. We didn't get a very strong bounce. We didn't get back up to 50K. We didn't retest the right shoulder. So, or the right neckline. It would be nice to get a bounce. Yes. But after that, doom.
Okay. Ben, what's your take on that? Do you see 10,000 in the cards in the near future?
So, there's a lot that Richard said I don't disagree with. I ultimately think we will get an 85% drop, but I think it'll be higher than $10,000 because I think we're going to make a new top in this bull run. If you look traditionally at what we call the Bitcoin Golden Bull ratio, it is not time for this market to be over yet. And you guys know the Bitcoin halving drives the fundamentals of this entire market. So in my opinion, I do think we have another leg up, maybe up test, $100,000 before we get that drop. So when we get an 85% drop from $100 or from $100,000, you could be looking closer between, $15,000 and $20,000, somewhere in that range for that drop. But I think the main difference between what I believe and what Richard believes about where we're at right now, and I understand his position of, Elon Musk already bought, Michael Saylor, but I would say Michael Saylor has been buying up, in the 40s and the 50s too. So he actually may be about dead even if you really look at all his buying prices for overall. Mm-hmm. But what I would say the only difference between him and I is I just don't think we've topped out yet. I don't think the next leg up will be a bull trap. I think that by the end of September, beginning of October, that's where we will see the market peak out, and then we will have the 85% correction on the way down. And, I've said that all along. I think that is in the cards. I just don't think that it's there yet.
Perfect. And then, guys, if you're watching on YouTube, we've got about 3,000 watching right now. If you could smash those likes, I think we can get the likes up to about 3,000 or 3,500 today, no problem. And as well as if you're on Twitch, just give us a like. We've got a lot of fun stuff coming to Twitch in the next few weeks, which is where you'll probably be seeing more of me as well. So I'm going to come to Dapp University on this one. We kind of heard two sides of the argument. Ben thinks it could break up. Richard's feeling it could break down. I want to hear what... I know last time you were on the show, you had a fairly bullish sentiment. So what kind of metrics and indicators are you looking at that make you feel it might actually break to the upside?
Yeah, totally. So I'll start off by saying, I'm leaning bullish on this, but I'm definitely, keeping the perspective open for what a downside could look like. So basically, as terms of the upside, it seems like we have run out of a lot of some of the big, exciting narratives for Bitcoin in particular that could, fuel the fire for a next explosive, rally up. So if anything, I see things kind of being a little bit slower in the near future. But what I'm focusing on is actually the fundamentals of what's happening a lot with the tech that's, below Bitcoin, particularly around what's happening on the Ethereum network. And we're going to potentially talk about Pulse here a little bit. A lot of the innovations happening in DeFi. Of course, we've got a bunch of major network upgrades coming out pretty soon. We've got the layer 2s that are shipping pretty soon. Basically, a lot of the frustration, the pain points that people kind of got into during this first wave of the bull run, saying hey, all this technology is amazing, but it's got a ton of user experience issues. A lot of those are about to get much better. A lot of fees are about to get much better. Transaction times are going to get much better. And I think that will open up the door to a lot of use cases. And at some point, a lot of the price and sentiment follows the hype of the actual technology. Now, we saw that with the DeFi boom that kind of started to bubble up in 2020. That, in the very least, coincided with the Bitcoin price rising. Now, whether that's going to be strong enough to carry the entire market with it, we'll have to wait and see. But I guess what I'm saying is I'm still pretty optimistic about the tech fundamentals that are on the roadmap that I can basically track the progress of. And that's the bull case in my opinion. Now, as far as the downside goes, if we did in fact just peak out recently, this is the question that I want to pose back on everybody else is, if it didn't, if we didn't peak out as high as we thought we were going to, I guess why would we go down for an 85% drop? Why would we think it's going to be as severe as last time if the bubble wasn't as explosive as the last time?
Good point. No, I like that. Yeah,
the simple answer is that these are reflexive systems. The technology is basically the same for the last 10 years, mostly, particularly in Bitcoin's case. People buy it, not because the technology got better, but because the price went up. So people bought it. So the price went up. So people bought it. So the price went up. And that's fun. That's awesome. So you get punched in the nose hard enough. And then they sell it because it went down. So they sell it because it went down. So they sell it because it went down. And then they get exhausted and you redo it again. These markets are more speculative than they are base demand driven. You don't need to buy Bitcoin to pay your rent. You don't need to buy Bitcoin to buy food. You basically only buy Bitcoin to get rich. And as long as it's making everyone rich, it's fulfilling its use case. But as soon as it starts making people poor, they poured, fuel on the fire.
Yeah. Well,
and Michael Saylor's last buy didn't move the price up at all. It dumped right through it. And he put quite a few $100 million in. It's like it wasn't even there.
Well, and like you said, people do something and then they want to see an immediate return or immediate action, or they don't do something and they want to see the inverse action. So I think what you were describing there is kind of a little bit of impatience. People buy Bitcoin and it starts going down, and then they think, oh no, like you said, they panic and then they sell it. So Aaron, I wanted to come to you with this one for people that maybe say this is their first time. They bought Bitcoin maybe end of last year, beginning of this year. This is their first experience with it, and they are kind of feeling the way Richard was just describing, like, hey, I bought it at 50 or 64. I bought it because it's supposed to make me rich, and the money, the price is supposed to go up. That's why I bought it. Now it's gone down, and they're getting a little impatient waiting for it. So what do you tell somebody who's really impatient and frustrated with the fact that Bitcoin's been trading in such a tight range recently?
Hey, what's up, guys? Thanks for having me on the show again. If somebody bought Bitcoin for the first time, congrats, man. Everybody always remembers their first,
That's right.
Regarding what you said, I got some smiles. Regarding what you said, past performance, no indication of future results, but anybody who held Bitcoin for 3.5 years has been in profit. I'm still long-term bullish on Bitcoin. I have no idea what's going to happen in the short term. Perhaps it goes lower, but I'm long-term bullish. And, if any of us knew the future, we'd all be rich. But regarding, certain metrics, stuff we've been sharing on our channel.
We're all rich.
Well, that's on this channel, yeah.
The Louis Vuitton Don. But, we've been sharing on my channel certain metrics, like the Puel multiple, which is either flashed bullish or like a bottom signal, which only has done like that 3 or 4 times in the past couple of years. You pointed out the Bollinger Bands. We shared something the other day, the SSR, which is Bitcoin's stablecoin supply ratio, or even on-chain metrics showing that long-term hodlers, wallets that have a history of buying and not selling too much Bitcoin, are not really selling at this point. And over the last couple of months, it's really the new whales that have been selling. So you know what? It could go down a little bit lower. I tend to lean more on the side of BitBoy, where I think we'll see new highs this year. But hey, anything could happen.
Well, and you're right. Anything can happen, and that's what makes it fun, and that's what keeps us all here every day, digging into this, learning all about it, and seeing what happens. So let's go ahead and shift gears here and talk a little bit about Ethereum and Pulse. Richard, we were talking a little bit before the show. You were saying you started mining and mined first full blocks when Bitcoin was back at 50 cents. So I know you've been in Bitcoin for a really long time, and Ben and I, we were actually talking before the show started that you were one of the first people that was kind of came out against Bitcoin and said Ethereum's where it's at. Bitcoin's slow. We're trying to build this project here. It's not working. We're moving everything over to Ethereum. Ethereum's where it's at. Now you've got your own project because you kind of ran into similar things with Ethereum, right? Where you were trying to build on Ethereum, and now you're saying I don't see Ethereum working out. I think it's going to be Pulse. So kind of tell us a little bit about that journey, how you got from, well,
Sure.
I guess start with telling everybody at home, like what first attracted you to Bitcoin? What first got you excited about Bitcoin as a virtual currency?
Yep. Hello, everybody. I'm Richard Hart. Richard Hartwin on Twitter. I have been in Bitcoin since early 2011 when I mined full Bitcoin blocks with 50 BTC block rewards on my own with my personal computer and video card with no pool. And back then, you didn't even have to use a fee. You could send Bitcoin for free. After doing that, bought the top at 30, helped make the top and wrote it down to 2 because I thought, oh, it's really getting adoption with the Wired News article that talked about the Silk Road and its use on darknet markets. Then Bitcoin went from 2 to 1,300 to 266 to 20,000 to 3,000 to 14,000 to 3,000 to 65,000, and now we're at 35,000. So it's been a fun and wild journey. Blockchains are the world's slowest, most expensive, shittiest databases. They're the worst databases in the entire world. And we're willing to accept that pain and that horror and that cost because it's censorship resistant. And so blockchain's only utility, only use to the world is censorship resistance communication. And for currencies, it's wonderful because it allows you to bypass capital controls. You know, stable coins are wildly popular in China. China has currency controls. They control how much money you can let in and out of the country. South Korea has currency controls. A lot of countries do, Venezuela, et cetera. So if you can get all of the censorship resistance with higher throughput and lower costs and not destroying the environment, it's win-win for everybody. So for instance, in Bitcoin miners, they dump the Bitcoin price every day because miners sell Bitcoin. They buy electricity and mining hardware, enriching mining hardware companies, none of which are US based, and enriching electricity companies. And what do you think the electricity companies do with the money? About 20, 30% of it is to destroy the environment. Some of it, or most of it in Bitcoin, is renewables. But even if Bitcoin didn't destroy the environment and it didn't waste electricity, those miners are still dumping the price every day with the new coins that they minted out of thin air. People think Bitcoin's deflationary. It's not. It went from 0 coins to 18.5 million coins by hyperinflating. Now that hyperinflation drops by half every 4 years, and that's awesome, and it helps the price go up. It was the first pumpamental that Satoshi invented. So basically, what they're doing with Ethereum now is implementing EIP 1559 in the next hard fork, the London hard fork, which will do fee burning, which will reduce the amount that the miners get to dump, help Ethereum's price go up. And the coin that I'm launching, which is Pulse, is going to beat Ethereum 2.0 to market with Ethereum 1.0 modified to be better. So you get rid of the miners. They don't dump the price anymore.
Let me ask you this, though. Better is a big word. So what exact, and obviously it's open to a lot of different interpretation from a lot of different people. You know, everybody knows there's different use cases for different blockchains, different reasons for using different ones. So what do you mean when you say better?
Well, let's take BSC for an example. BSC is a fork of Ethereum that has higher throughput by having 3-second blocks. Pulse Chain, mine, is a fork of Ethereum that has higher throughput by having 3-second blocks. So you have 4 times the throughput. Average block time on Ethereum is 13 seconds.
Right, but you have much lower security.
That's not really how it works. So in a normal proof of work environment, you're under threat if you're a minority proof of work chain like Ethereum Classic. Ethereum Classic has been multiple times 51% attacked because it's easy to just get a bunch of mining hash rate from nicehash.com, renting it, and go on 51 spending their chain. Because it's easy to get more hash rate from outside their chain than inside it because they have a minority hash rate chain. In a proof of stake system, you don't have that option to go to NiceHash and rent a bunch of hash. You actually have to buy the stake. And then if you fuck around on the chain, your stake gets slashed and you lose that money. So I can name you a ton more proof of work networks that have had problems with 51% attacks than proof of stake networks. I can maybe name one proof of stake network that's ever had a problem, but I contain tons of proof of work ones that have had problems. So proof of stake is actually more secure than proof of work, but people just aren't measuring it for some reason. Like here's the coins that had inflation bugs where you could have minted as many free coins as you wanted. Bitcoin twice. They had to roll back the chain once in 2010. They had a Bitcoin Cash developer discovered the last inflation bug about 2 years ago and responsibly disclosed it instead of just minting as many free Bitcoin as he wanted. Ravencoin had a 10% inflation bug where the hackers dumped it on market. XLM Lumens had an inflation bug where they just made up for what the hacker stole and dumped by getting rid of their own. And then who else? Bitcoin had an inflation bug. So the most critical vulnerability on all these blockchains is inflation bugs. And things like Hex that have isolated consensus code you can't accidentally mess up when you're trying to improve the network are resistant to those bugs. But all these other spaghetti code blockchain things aren't. Every fork of Bitcoin's not. Bitcoin's spaghetti code. It's impossible to write against. It has no spec. It takes 9 months just to be brought up to speed to try and improve it without breaking it.
Yeah, we definitely acknowledge that. Bitcoin definitely is. We were talking about that today with the Taproot upgrade of just how slow all these upgrades are. You know, it definitely takes time to change something that's already large and already has a big network and a lot of value locked up on it, which is
and they still fuck it up anyway.
Yeah,
they introduced that inflation bug by trying to make it work better.
By the way,
so going slow doesn't even help them not fuck up. They're still fucking up.
We do try to keep this show family friendly, by the way, just for
I'm sorry, man.
The viewers. No, it's fine. I forgot to. I forgot to tell you that before the show. Yeah, it's fine. And I should have known.
We usually on the edited videos, Richard, we just put a bleep over all your words, but we're live here, so
yeah,
it's okay. It's okay.
But
there's only one Richard. You get the only Richard you get. So
yeah, well, and I know you are. Obviously not everybody agrees with your perspective, but I think you do have a really good perspective. So what do you say to people that say, Hex? I mean, I know we were talking about Pulse specifically, but Hex, your previous project, was a lockup token and it had some rebasing features and things like that. And a lot of people call that a scam. A lot, that just in the space, a lot of people come out and say, hey, Hex is a scam. It's a Ponzi. Well, so what's your response to that?
Let's ask Mr. Boy of Bit what Hex can do. He knows.
Okay,
he knows how good Hex is.
Mr. Boy of Bit.
Mr. Boy of Bit.
Take it
away. Yeah. So the truth is, and this is what I've talked about on some shows before. I made a lot of money with it. I made a lot of money with it, but I would say the thing for me is that it is a pretty complicated project. Compared to a lot of other ones. I think the minutia of a lot of those complicated aspects of it, and people trying to figure out where the money comes from, where the money goes. I think that's why a lot of people, they just kind of just blanket call it a scam because they don't maybe have the answers to those questions or they don't understand it. I feel like if I were to really get into Hex and really I would have to spend a lot of time researching it and a lot of time trying to really and truly understand it from top to the bottom. I think that's something that
I bet I could explain it to you in a minute and you get it.
Yeah.
In a minute, I could explain it to you.
Well, you've explained it a lot of times.
So first, the price.
Yeah.
No, but I can do it in 1 minute. Okay. It's the highest performing, best performing asset that's ever existed in the history of mankind. It went up 174,000% in 521 days. Bitcoin dropped 55%. Ethereum dropped 65%. Hex only dropped like 30 or 40%, and it's only 10% from its all-time high now. Hex is it's the best looking chart in crypto, and the only chart better than Hex's price chart is the Hex share price chart, because the Hex share price keeps going up. That's how we simulate compounding interest. If you care about price, there's nothing in the world that's ever been better. Here's what blockchains are. They're narrative memes that give you an excuse to buy and hold something. And that's the only reason the price of any of these things go up, is because people buy and hold it. Bitcoin used to be programmable money. No one programmed anything on it. Then it used to be, we're going to enable poor countries. And then it used to be peer-to-peer digital cash. And then all those things just went away and no one gave a shit. And now it's digital gold, which is more valuable. So that's great. But what happened to all the old narratives? They weren't important. All that really matters to the price is that people buy and they don't sell. So what Hex does is it gets rid of all that narrative storytelling crap. Like ADA is going to have smart contracts. Oh yeah? When? It's been years now. You've been telling that story a long time. Litecoin founder comes out, says we're getting confidential transactions. Oh yeah? Are you? When? Where'd they go? Oh, they were forgotten about. All these garbage memes and lies that are out there. Hex says, you know what? We're going to monetize the only thing that the price actually cares about, buying and holding, just like your bank does. When you go to your bank, you lock up your money. The longer you lock, the more you get paid. Oh, but that money goes and gets lent out to other people. No, it doesn't. No, it doesn't, because that would reduce the reserves. They use those reserves to go get the real money that they lend out from the Fed at a ratio where they get leveraged up. Yeah. So when you lend your money to the bank by depositing it, yeah.
Yeah, I was just saying, like, what would happen? Okay, so that's great. Like, I understand you're basically just dicing down, getting down to brass tacks. Like, what all the meme coins and the narratives are saying. Like, you're just saying, like, hey, let's take advantage of this. But what would happen? And this is a question a lot of people have. What would happen if tomorrow everybody decided, hey, you know what? I'm just going to pull my Hex out. what happens at that
The same thing, the exact same thing that would happen to the housing market or the stock market or anything market. Every single instrument in the entire world, regardless of what it is, the price dumps like hell and goes and trends towards zero if everyone chooses to sell at the same time. It's called a bank run. And banks very rarely get run. Companies very rarely get run because there's a probabilistic timing element to how often people want to get out. Now let's address that question specifically. What do you think is safer? A coin like Bitcoin, where 42% of all the coins is in the hands of 2,000 wallets. 42% of all Bitcoin is in 2,000 wallets. Or a coin like Hex, where you know what the market supply is because you have a chart of future market supply because you know when people's stakes are able to end. And the average stake length is over 5.5 years. When Hex started, it was only about 3.5 years. Now it's 5.5 years because people believe more and more in the system. There's never been a financial instrument in the world where people believed so much they locked their money up on average for 5.5. To get to a 5.5 average, you got to have a lot of people at 10, a lot of people at 15 years. So we see people come in, take $1 million or $2 million and lock it up for 15 years. Now, what do you think is going to happen to the price? Now, if one day magically people didn't want to lock up their money for as long anymore, yeah, you're going to get dips, and dips are in the game. You're always going to get dips in crypto. So I don't care what crypto you buy, you're going to get dips. That's every speculative instrument. Amazon dipped 95%.
I would say that, I don't disagree with anything you're saying. I mean, I've heard no lies, but what I would say on that is that the Hex community, there's no one, in my opinion, that's really like half in on Hex. Like either you're calling it a scam or you're extremely dedicated to it. Like there's nobody in that community that's not like ferocious about their Hex holdings.
Well, I would disagree with a couple of those things. If it's okay, like which is part of the show. Like we bring.
That's why we're all here.
We all have different opinions. We all like to share them. I think honest discourse and having a conversation. Like I think it just makes for a good conversation. So one, we definitely need to get a timer because that was not 1 minute. Number two.
Yeah, the funny part, I didn't get to the minute.
Yeah.
The minute was it's a system that inflates less than Bitcoin and just gives it to stakers to hold the price up instead of miners to dump the price. That's it.
Okay. And then it just, to me, it sounded somewhat like a circular argument, more or less, that I guess you were saying all of crypto and blockchain is a Ponzi, so we're just the best Ponzi. Because, if you throw those numbers out, like I understand huge returns, but like those numbers just sound like and kind of like what Ben was saying, if everybody was to withdraw at once, yes, you would have a flash crash. Yes, that's the same thing that would happen with the bank in fractional reserve banking, and that's a big Ponzi. So I guess if you're saying you run a better Ponzi, well, okay.
So it's human beings keep being born. We keep getting increases in GDP, which keeps giving us all more wealth, and yet we're all more wealthy every year, and that is not a Ponzi. Computers are faster every year. Cars are faster every year. Cars are safer every year. Everything's getting better every year. It's not a Ponzi. It's just human progress. Bitcoin's up 6.5 million X.
Opinion. I think some people would disagree in some countries.
Bitcoin's up 6.5 million X. Does that sound reasonable?
I think he's right on that. Like, yeah, there are some countries that, at different times it doesn't feel like maybe they're still third world. But like, if you look at, and I've made this argument a lot, like if you look at what a third world kind of living is now, that's how like pretty much some of the best people were living back in the 1400s. Like there's constantly more innovation, constantly more technology. Like, a running toilet, that didn't exist in the 1400s. So the people that are living at the peak of life were living below the American poverty line today in a lot of ways.
Well, and that's the same argument the World Economic Forum and the World Bank make too. That just give us all the control, let us do everything, and then all of your lives will get better. Just trust us. And I don't agree with that. So
well, I don't agree with that either. But I'm just saying, just by being a citizen of the world, over time, our life gets better. From generation to generation based on technology and innovation, not necessarily about control.
There are many cryptocurrencies that are vastly superior imaginary made-up money to the government's imaginary made-up money. It's all imaginary made-up shit. The only thing that matters is goods and services. Everything else is accounting. Goods and services are the only thing that matter. So our made-up internet money is better than the government's made-up internet money. Go check the price chart. Yeah, Bitcoin's better, Ethereum's better, everything in the top 10's better.
I would
I
agree.
always want to disagree with him so much, but that's why I like him so much, because I always find myself like agreeing with a lot of stuff he says. Maybe I'm the one that's getting on.
No, I mean, I would agree with the statement. Our made-up internet money is definitely better than the government's made-up internet money. I tend to lean more towards something like Bitcoin that can't flash. Like it could go down dramatically, but that's kind of what it's all built on.
It went 65% down in 2 weeks during COVID.
Right, but it'll never go.
In the 2017 bear, it dropped 85%, and Dogecoin dropped 95%, and Ethereum dropped 95%. So you got a 10% difference. Now look, it's tricky. It's really a 3x difference, but it's still not that big of a fucking difference. And you made back all those gains and more. Bitcoin has been the lowest performing financial asset of nearly all the cryptocurrencies. It's up like a 3 or 4x year over year. Everything else is up 1700x, 400x, 500. Like, it's just, you could have, if you hated Hex, you could have bought it and sold it on a double, 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 or sold it on a fucking double. And we're almost to the next one, 10 doublings. Like, oh, you don't like it? We'll sell it on a fucking double. You'll make more than you would have in Bitcoin.
Yeah, no, I'm with you on that. Like, I kind of see it like a lot of, I call them marketing coins, hype coin, it's no different than a lot of the other safe moons and elongates and some of those. If they're going up and you want to buy it and put some money in and make it go up,
those shits are scams, bro. SafeMoon is a literal scam copy of Proof of Weekends from 2017 that cost you a 10% fee to spend your money, the opposite of low fees, the opposite of efficiency, the maximum shit possible 10% fee to spend your money. Fucking scam. It's
and
a
you
literal
also
scam.
said you also said Binance was a scam too. So and we use the word scam.
I know people
carefully.
that can't get their money.
So
I can't.
You seem to use it pretty loosely.
Go check the chart.
No,
the chart of how Proof of Weekends did. It's now doing nothing. It's dead. And it's the exact same coin. It's the same fucking coin.
I agree.
The new name. And as far as Binance go, I know people that can't get their money off. That's called stealing. I don't care how many hostage videos and selfies you send, they won't give you your fucking money. Now look, that's not most people's experience. Most people's experience with Binance is they can get their money. But that doesn't make it okay for them to steal people's money. I, with my own eyes, know people that cannot get their money out of Binance no matter how many selfies they send, bro. It's fucking theft.
Yeah.
Sorry for the cursing.
No, it's good. It's just going to be a passionate episode. I like it. So I'm going to come to Greg here on this one, Dapp University, because like Ben said, like you from a pure dialed in, from a one logical perspective, you could that makes sense. Buy something that goes up, you make money, and you're happy. So I want to hear the counterpoint.
You could make Bitcoin better.
Yeah,
just change the proof of work to proof of stake, and then it would be better.
That's where I was going to go. If you're looking for something beyond just I buy it, it goes up, I sell the top. If you're looking for something you want to hold long term, what is some of the stuff that attracts you to Ethereum and some of those other kind of projects, Greg, that I know you're a fan of?
Yeah, sure. So I guess I'll start off with I'm having a great time. I've just been over here like cracking up listening to this conversation.
It's
this
fun.
has been awesome.
Yeah.
And also I've been mesmerized by Richard's watch winder in the background. Looks like it's stopped now, but it's just going into
$1 million
of
watches.
Wow.
Okay, wrist check. What's on your wrist right now?
Just a Louis Vuitton bracelet because all my 8 fucking watches look better here. I got another one coming, so I got a 9th one.
Nice. I've been digging that. So, anyways.
I can tell you what they are if you really care.
Yeah, I'd love to hear what they are.
We got a platinum Daytona gold with diamond dial and diamond or sapphire bezel, GMT Master 2, rose gold, diamond bracelet, diamond dial, diamond or sapphire ruby bezel, white gold, I've basically got the same watch in white gold, yellow gold, rose gold. These are Patek Philippe. 5726 annual calendar, and this is a two-tone 5980 chronograph. These are like, I don't know, 125 or 140. This is like 110, and these are just a two-tone Submariner and a two-tone Daytona.
That's amazing.
I made money on all
That's
these.
Amazing.
Prices went up on all of them. I won't buy a watch I lose money on. I'm cheap.
That's
cheap
awesome.
billionaire.
So I'll get back to the question at hand. Sorry about that. So you're talking about what attracts me, the other assets that I kind of have a long-term belief in. So yeah, I mean, to me, I like to look at things that actually have some sort of utility value. That's why I stick a lot with like layer one assets, and I'm attracted to things like staking. So I'm sure Richard wants to talk maybe some about that with Pulse Chain. one of the reasons I love ETH so much is because you can do so much with it outside of just, staking it. You can, of course, use it to pay for transactions. You can use it just to hold on to price appreciation. But I'm so fascinated by what you can do with ETH and DeFi, using it as collateral for loans, using it to back other assets like DAI, for example, to create some sort of actually crypto-backed stable coin. There's so many cool things you can do.
DAI's hurt though, man. DAI's like 60 or 70% USDT and USDC admin key based collateral, which sucks. So it has counterparty risk now, unfortunately.
Yeah,
because we need a stable coin that doesn't have that counterparty admin key bullshit. I'm sorry, cursing.
Yeah, I totally get what you're coming from, especially since DAI changed from, Psi was the original DAI, or it got renamed to Psi, but then talking about multi-collateral DAI, and then basically, a lot of DAI's composition being backed by some fiat-backed stablecoins. Totally get that. But the whole point I guess I'm trying to make is the more you can do with ETH is what makes me so fascinated with it. But that's why I'm curious to hear, some of the plans for Pulse Chain.
Well, you know what? Ethereum 2.0 wants to improve Ethereum 1.0. They want to get rid of the miners dumping it and hurting the price all the time. Staking solves that. Going to proof of stake solves that. Great. They want to pay you to hold your coins to help the price appreciate. Great. Problem is you got to be a network admin to actually stake Ethereum and make profit with 32 ETH behind you. So everyone's going to end up giving their coins to someone else, the opposite of why crypto was invented. And then those guys are going to get scammed. And we've already seen this. We've already seen $100 million plus get exit scammed by losing the keys of an ETH 2.0 staking operation. So that's the opposite of why crypto was invented. Not your keys, not your coins. The way ETH did staking isn't ideal. So what else do people like? People love free money. People say there's no such thing as free money. I've seen people make millions and millions and millions and millions and millions of dollars of free money off of the Uniswap airdrop, the 1inch airdrop, the Tornado Cash airdrop. Hex was given out for free. XRP was given out for free. I mined Bitcoin for free. There's a ton of free money. XLM was given out for free. There's a ton of free money in cryptocurrency. It's out there. So Pulse is a fork of Ethereum that brings over all the coins. So if you've got some coin you like, maybe it's Hex, maybe it's USDC, maybe it's Chainlink, you're going to get a copy of it on the Pulse chain, and your keys are just going to work. You don't have to do anything. When you're in MetaMask, you change one setting, boom, your coins are there. Now, what's the trick? The trick is the Ethereum holders are going to get diluted into oblivion. The Ethereum holders are only going to get 1/10,000th the supply. Who's going to get all the rest of the supply? People that sacrifice. Sacrifice to where? You can donate to a charity called the SENS Foundation, SENS.org. They do medical research. You're going to get 75% credit if you do that, plus a tax write-off. Could be very nice. Or you can donate to some other addresses, sacrifice to them, and then, those two parties get all the supply. But all the ERC20 guys, looks like they're going to be getting a free ride. And there's going to be liquidity because in Uniswap, if one thing has liquidity, everything has liquidity because you can route from one thing to another. You can't actually exhaust a Uniswap pair of its coins by trading, which is an interesting...
It is pretty amazing what we're able to do today with decentralized exchanges compared to not very long ago. I mean, the what they created with liquidity pools and all that kind of stuff is a pretty amazing invention. So we got the chat, both Twitch and YouTube, asking to hear from some Altcoin Daily. They feel like they want to hear a little bit more from Aaron on this. You've just been quiet there in the bottom right hand corner. So let's hear from you a little bit. What's your take on all this? I know you've got some big perspectives on a lot of different things. So let's hear from you a bit on some of this.
Appreciate that. I love the chat. Chat loves me. I mean, regarding Hex, just from a totally neutral, objective observer, it seems to me, when I look out, Hex versus the cryptocurrency market, I don't think I'm talking out of school. I don't think, I think a lot of people have noticed. It seems to me like Hex seems to be like a pariah in the cryptocurrency space. And first of all, I would have a beer with Richard. I like all the Hexicans on an individual level. They seem like nice guys. I'm not the cops. I'm not regulators. I don't care what anybody does as long as I have all the information. But just looking at a neutral point of view, it seems to me that they don't rank it on CoinMarketCap. They don't list it on any significant big traditional exchanges. It's not talked about on crypto media or digital publications or by influencers. So I think it's obvious to say that there's a disconnect in the common ground between Richard and the Hexicans and the rest of the cryptocurrency community on Hex's value prop. Now, again, I'm just as a neutral, objective person, just noticing what the cryptocurrency market seems to think of Hex. I've like distilled it down into 3 big critiques that I think that the cryptocurrency market has on Hex. If you'd like, I can go over them. Just what I've noticed in the cryptocurrency.
Sure.
Okay.
Slam
But,
it.
you know,
Kill
I
Hex.
think
Hex sucks. Kill it. I'm ready.
Right. And again, I'd have a beer with Richard, have nothing against the Hexkins on an individual level. Anybody can do what they want as long as they have all the information. But I think there is a disconnect. So the first thing is, we'll go at them one at a time, I guess. We'll do the first thing first. If these are cleared up, you find common ground with the cryptocurrency community, I think Hex could maybe be accepted. The original thing is that the origin address controls a minimum of like 40% of the Hex supply forever, so that if the origin address sold all the Hex today, over time it would reaccumulate the 40% plus, and I think Chainalysis actually puts it as they control like 60, 70, 80%. I can't remember exactly what that is, but I think a lot of people look at that and go like, well, what are the long-term implications of that? If Hex scales, if this really is a CD-like thing, replacing CDs or like a CD, what are the long-term implications of the origin address controlling such a large percentage? I mean, I think personally Hex would have been more accepted if you would have created Hex without the origin address controlling so much forever. So that's one of 3.
Yep. So, yeah, sure. People in cryptocurrency don't understand how markets work. So a bunch of broke guys that have never been successful decide that they're economists. And the funny part is economists in general are broke too. So they do this fan fiction that they think they know what makes a blockchain valuable. And then everything they thought was wrong. And then all the crap that you see in the top 10 and stuff, they don't think should belong there. TRX, what is that crap? How did that get up there? Tether, why would someone want fake dollars? How did that get up there? And then everyone gets educated by the market. So I'll do some of this education. Decentralization is amazing for censorship resistance, and it is absolutely terrible for price performance. The most decentralized coin that you can think of, Bitcoin, is getting dominated by everything else that has vastly more centralized ownership. Every single ERC20 has vastly centralized ownership. You can go to etherscan.io, click the ERC20 of your choice, click holders, and you're going to see giant percents next to the top 100 holders of every single ERC20. And then even Bitcoin, which people think is decentralized, 42% of the coins are in 2,000 addresses. It's a fact. It's on chain. You can Google a Bitcoin rich list, and it's going to take you to BitInfo charts or something. And you can look this up for Dogecoin. You can look it up for Bitcoin. Centralized ownership is the absolute most powerful tool for any speculative instrument. And the evidence for that is in every single stock and every single cryptocurrency. Who owns the majority of voting shares in Facebook? Mark Zuckerberg. How's Facebook stock look? Up and to the right forever. Okay. How's Tesla doing? Up and to the right forever. And how much does Elon Musk own? 20%. And every single centralized ownership thing does amazingly well because the guys that are whales, they're just playing a numbers game. Yeah, I got $1 million of watches. It's not even a dent in my net worth. It's like nothing. So for me, it's a numbers game. Maybe it changes the world game one day. But for the plebs that are broke, they need to sell to buy stuff. They need to buy this, buy that, buy this, buy that. And so when you look at who has the longest stakes in Hex, it's the richest guys because they don't need the money. But the broke guys, they make a real short thing. So people in crypto, they think the decentralized network stuff somehow carries over to the ownership percentage, and the reality is 100% false. If it were true that more decentralized things outperformed more centralized things from an ownership perspective, then socialism would have worked amazingly. Because socialism is when you get rid of rich people, you get rid of weird Gini coefficients, and you cut the heads off the rich people, and you give the poor people everything. But then just like you said, you know what happens? The rich get rich again because the poor have bad habits and they can't delay gratification. And by the way, if you know people that bought Bitcoin at $1 and they traded, they lost it all. Or maybe they thought they were smart and sold it at 2x. What percentage of Bitcoin's 6 million X run up have people actually captured? And imagine if you could have locked up your Bitcoin back then, imagine how many more millionaires there'd be. All of cryptocurrency basically gets advertised as people trading in and out of coins, getting beat up by fees, trading in and out of margin positions, getting liquidated, when the most profitable thing in cryptocurrency is holding. And so I incentivize the only thing that really makes people rich in crypto, while everyone else incentivizes you getting in and getting out as quick as possible as you can and getting annihilated. It's crazy.
Yeah.
So
well,
yeah, I think the origin address has at least 50% of the supply. And from what I've seen,
forever,
it's never harmed the price. Yeah, forever.
But I guess there is that.
I mean,
risk in the
not really.
future
Like
that-
you don't. Yeah, and you know what that risk is? The risk is the same that emergently happens when a bunch of noobs sell down the Bitcoin price 85% every 3 years. You're gonna get dips in crypto. Period. I don't care what you buy. You're gonna get dips.
For sure. And you know,
Satoshi has 1 million
people can
coins.
go
Where are they at? And why are they
coins
counted as
today
circulating
wouldn't-
supply?
If Satoshi sold all the coins today, he wouldn't. They wouldn't pop back up in the origin address in perpetuity.
Yeah, but why
We
are
can
you a
move on, yeah.
socialist? Why do you care that someone else is richer than you? Why do you think you deserve more? You don't deserve more.
First of all, it's not me. This is because I'm just I'm a crypto commentator, and I just noticed there's a lack of common
sure.
ground between Richard and the Hexicans versus the crypto community. I think I've identified.
I agree.
three
I
things.
agree with you. I agree with you that people think centralized ownership is bad, and all of the study of ownership percentage, all successful enterprises show that they're wrong, and that includes countries. How many countries are run by one guy that can do the nukes? All of them. How many teams are run by one guy that calls the play? All of them. How many families are run by one guy that makes the breadwinner? All of them. Centralized control works everywhere, and if you don't realize that, you're a socialist and you're a loser. Just measure the reality.
No, I 2 and 3. I can get through these relatively
let's go
quickly
ahead.
just to get everything out. Okay, point number 2. Happy Richard mentioned he's not shying away from there's aspects of centralization and Hex. And Richard has made it very clear that Richard has made it very clear that there is no promise of work. He's made that explicitly clear with Hex. It seems to me, and again, this is just what I think, the outside world looks at Hex and doesn't like this part of it. There seems to me that the outside world thinks there's like a wink, wink, nudge, nudge promise of work. And then like, would the project be viable without the leadership and marketing of Richard? Now, obviously the protocol would still work. It would still execute. But I think, people look at, Richard's such a great communicator and such a great marketer, and he does such a good job like shaping, how Hexicans think and stuff. I think a lot of people look at that and like, would the project be viable if Richard wasn't to shape it in its early years for the marketing and do all this stuff? That's a small point.
Sure.
Well, why don't we go ahead?
It's an issue.
Why don't we go ahead and get them both out, and then you can respond to them both at the same time.
Okay. And then Richard can have the floor after that. Because once again, I don't care what people do as long as they have all the information. You guys can do what you want. But the third point is the obligatory recycled ETH from the first year and possibly recycled Hex. Now, over a year ago, when Hex was going through its first year, they had the adoption amplifier, and this one person did like a chain analysis. According to him, this is all 100% verifiable, and you can go back and look at videos and see his addresses. Now, I'm just alleging this because I don't know for sure. That basically the first year that Ethereum was recycled, sent back through the adoption amplifier, recycled buying Hex on Uniswap to simulate more demand than there actually is and inflate the price, and recycled to supply liquidity to Uniswap. And then I guess people are concerned all this Hex that the origin address still controls, you've made it clear it hasn't sold any to date that people know of, is the origin address Hex being used to do something similar. So those were the 2 points. And I think
here's what I love about crypto
community.
Sure. Here's what I love about crypto, right? Price goes up, moon, everyone's happy. Price goes down, cheap coins, everyone's happy. Oh, it's called framing error in logic, okay? Founder dumps on your head, murders the price. Who has done this? Charlie Lee, Litecoin, murdered the price, dumped on everyone's head. Is he ostracized? No.
These are all good.
I hear someone was wash trading.
What about this?
Oh, this isn't whataboutism. I'm showing you a logical fallacy of framing error, where if someone founded a coin and then buys more of it, they're evil. But if they sell it, they're also evil. So whether you buy or sell something you created magically because of framing error, people that want to talk crap make you evil. So let's assume the worst of everything you said, and then let's assume it's even worse by 10x. Let's say that 99% of the coins were owned by somebody, a single person, okay? Let's say 99% of those coins were owned by somebody. What happens if that person dies? Price up, price down.
Nothing. Nothing happens. Oh.
That founders go and absolutely murder their products. Like, is Elon Musk going to sell all his shares? Is Bezos going to sell all his shares? Is Zuckerberg going to sell all his shares? Can you show me this history of founders that could be billionaires just by sitting around and doing nothing, but instead decide to murder the $1 billion thing for 10 or 20 or 100 million? There's no precedent for it. It's fantasy fiction garbage. It doesn't make any sense. What does make sense is using your eyes and looking who's actually buying. And I know who's actually buying because I go to t.me/hex trading. And when I see the price go up a lot or go down a lot, I go in there and those guys already know who it is. They go, yeah, this guy was a free claimer. He's dumping his whole coins. Every time one of his stakes opens up, he dumps them all. And then they go and they look and they go, yeah, this guy's buying up the price once every 4 hours. And they're looking at his wallet and he's got $300 million of USDC. Or they look at his wallet and he's got 85,000 Ethereum. We know who's shoving the price up because we can physically see it on uniswap.info. These things are not question marks. And I can assure you, none of those things are origin things. You can go through and look at every single trade. And I've seen the same reports that you've done where like, okay, OA has 50 and if recycling it exists, there's like an extra 30 or 35 or something. And then you end up with like 15 in the free market. So there's less coins on the market now? The price. So if you believe those stories, those are good stories for the price, not bad stories. Like people have fan fiction theories about how price should work, and then I design something that murders everything else that has ever existed, and then they just can't believe it's happening. It's happening. Hex will be the #1 market cap coin within the next year or two, and we can come back to this video, and you could go, oh, but Richard told me, and I didn't believe it. Yeah, I told you, and you'll see. It's happening. It's better than Bitcoin, period.
Well, and I think that time is the greatest barometer there. We're going to just have to give it some time and see what happens. And it sounds like from this whole discussion, I mean, I think Altcoin Daily made a lot of really good points there of saying of kind of pulling together a lot of the common kind of criticisms from the crypto community towards Hex. And I think you did a great job, Richard, of responding to a lot of those.
Those are the criticisms.
Yeah, I mean, it is what it is. And I think it sounds like from all of that discussion, I didn't disagree with a lot of the things you said. I mean, did disagree with some of them. But I think what it kind of comes down to is more or less what you were saying is you figured out a way to play the game that the centralized people were playing better than they have, and it's great for the price. It's great for making money, and it's great to send the price up. Whereas a lot of the people probably in the crypto community that do champion decentralization, they're trying to they want to see something different. They think there's a different.
Let's talk about decentralization,
and they're not just focused on the price. So I think that is probably the core main difference.
Let's talk about not price. Let's not talk about not price. I made Uniswap popular personally. I did more marketing than those guys did for their own project. Hex was the only thing on Uniswap doing volume for a very long time. And the liquidity providers were well rewarded for doing that by the Uniswap airdrop. So nice of them to do that. Hex has multiple front ends run by multiple people. So that if I die and Hex.com dies and whatever, it all dies, everyone can still use the stuff. Do you know how many other projects in DeFi actually have front ends from multiple parties so that if one front end goes down, you can keep using it? Almost no one.
There are
almost
definitely
no one.
It's
a
lot
fake
of scammy
DeFi.
projects in DeFi for sure. I'm not trying to compare, do a case by case comparison.
Admin keys.
There's tons
Matic has. No, but it's important because this is where people are going to lose millions of dollars. Not your keys, not your coins. $8 billion of money is in Matic. They have admin keys that at any moment, with no time lock, can freeze everybody's money forever. Is that okay? Is that what you got into crypto for? Hex has no admin keys. Hex can't freeze your money. The Hex trading, which is primarily on Uniswap, can't be stopped either. And by the way, as far as liquidity on there goes, I've been begging people to pull the ETH liquidity and make it USDC so we're not as reflexive with ETH price. They don't listen. They won't pull it. So even me begging people on Twitter isn't able to affect the Hex liquidity on these Uniswap pools. By the way, if you market sold 2 million on Uniswap right now, you'd only get 3.5% slippage. It's thick as heck, the order books. So we've had 100% uptime. Coinbase goes down all the time. Kraken goes down all the time. OKX founders went to jail. Withdrawals paused for a month and a half. KuCoin was hacked. Binance was hacked. BitMEX founders were arrested. Inflation bugs everywhere, rug pulls everywhere. We have 100% uptime in the trading, 100% uptime on the front end, 100% uptime in the coin, over 300,000 BTC claimed for free. We can't do better things. We're 100% perfect. I can't make the project any better. It's God mode. It is amazing compared to anything else in cryptocurrency. Anything. Even Ethereum has screw ups. They killed Infura. Peter Saligi that runs Geth killed Infura with an update surprise. Guess what went down when Ethereum went down? Everything.
And I'm not, like I said, I'm not trying to take away from anything you guys are doing. And I think what I was saying earlier is time is the only thing we can give it. We'll just have to see. Like you said, some of these projects might that have some of these design flaws. We'll see all that play out. We'll see people get wrecked, and we'll see a lot of people make a lot of money. So we'll see kind of where everything ends up as time goes on. But that's all we really have time for today. It does look like, Richard, you do have the most points. So this is a true 30 seconds. I don't know if you can do that, but we're going to give you 30 seconds to leave the audience with a parting message, but then we got to wrap the show up.
And then if you want to grab a beer, I'm down.
Yeah, where are you in the U.S. still? Or are you?
He doesn't talk about that.
Me? No,
Yeah, no,
I never
yeah.
tell anybody. I
I
don't
just
want
kinda
people
what I
like,
figured.
please, sir, can we have some hacks, please?
Yeah. All right, go ahead. 30
I don't need that in
seconds.
person. Hey, everybody. It's been really good talking to you guys. I've been at this forever. It's fun. I called the top at 20K. I called the top at 65K. It's neat. So if you like price stuff, follow me on Twitter, twitter.com/RichardHartWin. If you like free money, I've invented the world's biggest airdrop. It's happening really, really soon. We're getting into tooling infrastructure for public testing it now. Sacrifice phase starts soon. That's pulsechain.com, t.me/pulsechain.com. There's like 90 people on voice chat usually and 22,000 people in the room. No bots, no bounty hunters, no when sir, when moon crap. Just real serious crypto people. youtube.com/RichardHart. I have, you can sacrifice to charity, sens.org. You need to email them, airdrop at sens.org, sens.org. And that's it, man. Get rich, everybody. Awesome. I wrote some free books if you want self-help books, t.me/sci-vive.
Awesome. And thanks for joining us today, Richard. That was a really fun show. And I think, like Aaron said, the most important thing is, we don't care what anybody does. We just want to get out here and share the information and just do your own research, gather as much information for yourself, and time will be the judge. So that's all we have time for today. We'll be back. DZ will be your host tomorrow. Then you'll see me again on Friday. As always, 5 p.m. Eastern time. But for now, we're out.